Hello everyone, in this video we're going to look at PayPal, and this one showed up on one of my scans recently as a stock that could move up potentially 100% or more based on a combination of factors, technical and fundamental. I like to see them both align. So we have a chart up of PayPal. Let's quickly go through the technicals first. We had this huge decline from the high in 2021, and then it ultimately declined about 84%. Yeah, pretty close, 84% before bottoming out here. And then this is the first time we've really seen a bottoming pattern that's stuck somewhat. So we had this last wave down, then we had a move up to a slightly higher high, some choppy trading, and then we've had this bounce back up. So if we go through these other times, the price had a big rally here, but then just entered into another downtrend again, making lower lows, lower highs. This one a little bit there, but then we've had this rebound up, and we're kind of hanging out near the highs of what I call this rounded bottom type pattern. And so starting to look more bullish on the technical side, which is what we want. We want to see that bottoming in combination with the fundamentals, because just because a stock looks really good fundamentally doesn't mean it can't keep going lower. So we also want to see the fundamentals plus that stock bottoming out. So that means we don't get the exact low price. We're waiting for some confirmation to the upside. So right now we have one of the best valuations this stock has traded at in many years, plus the stock starting to move up. So this is Stock Rover. It's a research engine basically, and we can just quickly go through some of the data. What I like about this is expected to grow at about 18% per year. So part of why this stock fell so much is this is the PE ratio along the bottom. So basically the price divided by the earnings per share, and you can see it was trading at around 50, and then it just took off in 2020, 2021 as the stock also rose, and so the PE just got to pretty crazy levels, up to about 133. You can see here over the last 5 years it's ranged. Its low was 14, which we just got recently, and up to 133 when it got really kind of crazy valuation in 2021. Then it sold off a lot because it was overvalued, but then it also took a hit on earnings. You can see earnings over here. It was climbing nicely just every year, higher, 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 higher. A little bit of a stall out in 2021, and then in 2022 earnings dropped quite a bit. But you can see it's bouncing right back in 2023, and if we look out to 2024, earnings are expected to go up again, $4.66 per share and $5.13 in 2025. So we're basically getting earnings growth of about 18% estimated yearly over the next 5 years, and PE near its very low on that range, right? We're right near the bottom of that range. Forward PE, which looks at next year's earnings, 13. What I also like is that they've been buying back shares these last couple years when the stock price is really low. If you're going to buy back shares, ideally you want to do it when the price is low, because then as earnings increase again, there's fewer shares outstanding, so those earnings are split between fewer shareholders. I also like this. Over the last 5 years, they've still been increasing sales. You look at this, and it's just their revenue is increasing every year. That's what you want to see. So it's a good company in the sense that it's growing its sales, it's growing its earnings again. It had a little bit of a hiccup here, which coincided with the stock being very overvalued just before that. So we've basically moved to an extreme on the other side. People just sell it off, and so we went from really euphoric in this stock to basically investors being very bearish on it because it fell so much. And now we're starting to see that bottoming process come in here. And you can see this is the lowest PE it's been in the last 5 years. And we're also getting this bottoming. So I really like this. And I mentioned having potential for more than 100% upside. And how we can basically look at that is over the next couple years, if they can generate about $5 per share in revenue. We can look at this prior PE, and just kind of as a conservative estimate, we could say if it gets back to about 30, then a 30 PE with $5 in earnings, that would put the share price at about $150. Even if we only got up to 25, that'd be about $125 price target. And that's actually quite a bit lower than what it has traded at in the past. Like back here before that big run up, it was trading at around a 50 PE. So we're being a little conservative on our estimate of what kind of PE it could trade at. It is becoming a more mature company, I guess you could say, so it may trade at a lower PE. But 20 to 30 is very common for most stocks. Even the S&P 500 right now is trading at about a 28 PE. So price to earnings. So 30 is not unreasonable, especially for a company that is growing at about, or expected to grow at about 18% per year. For reference, the S&P 500, the average, or the median, I should say, estimated growth rate over the next 5 years is 9%. So PayPal is doubling that, expected to have double the revenue growth of basically the typical S&P 500 stock. So not unreasonable for it to trade at a higher PE than the S&P 500. And as mentioned, the S&P 500 is trading at 28 right now, and it will often trade between about 20 and 30. So that's why I like this one. It's trading at 67 or so right now, 66, 67. So I like this kind of purchase area between about 67. There's the option to try to wait for a pullback, maybe into 60, maybe along this little trend line, but then we run the risk of missing the move if this does start going up. But of course, on the flip side, if we wait for a pullback and get it, you have a better entry point and more potential upside. So I really like this kind of anywhere in this $67 to about $60 range, or just 67 and lower, I should say. And then, yeah, basically the deeper pullback you wait for, the better chance that you'll miss the move, but also the bigger the potential profit if it does happen to pull back. So I like that area there. And then based on the fundamentals, I think we could be moving back up into this 150 area, possibly even higher over the long term, but just kind of looking out over the next year or two, based on the earnings estimates, based on how we're so undervalued right now, typically to how this stock typically trades, I think 150 is a pretty good price target at them. There are no certainties in trading, so even though this looks like it could rally, always consider your downside as well. Earnings estimates could be reduced in the future, or the company could come up with lower than expected earnings, or the price just can continue to drop and continue to trade at a lower valuation than it has in the past or that it is currently. So consider both the upside scenario and the downside scenario. Where will you exit? Because you always want to manage your risks as well, because there are no guaranteed trades.